Hi everyone. Today our group is presenting our recommendations on how Paramount Health and Beauty Company should handle the launch of their newest product, the Paramount Clean Edge. As you can see, the members of our group are Omar Kamba, Emmanuel Carena, Tim Duff, Aaron Gerber, Kate McQuaid, Stephanie Spada, and myself, Colin McGonigal. If you inquire within the grooming industry about Paramount Health and Beauty Company, you will consistently hear one word: quality. For years, Paramount has been an industry leader by providing consumers with a range of quality health and grooming products from which to choose. Products that will not only improve the quality of your shave, but that will also leave you feeling satisfied with your decision to entrust your grooming needs to Paramount. While Paramount Pro and Avail have combined in recent years to command nearly 20% of the non-disposable razor market, we have developed a strategic plan that will surely help them capture an even larger piece of their target market with the launch of their newest product, the Paramount Clean Edge. Our plan provides Paramount with a roadmap to success by offering solutions to three difficult decisions the company is facing as they prepare to launch their newest and most advanced razor to date. First, we make a recommendation as to which segment of the market Paramount should target specifically and why they should pursue that segment. Next, we will explain how the Paramount Clean Edge should be positioned within the market so that it piques consumer interest without drastically increasing cannibalism of the company's other two main products. Finally, we will recommend how the grooming division's marketing budget should be allocated so that all products involved receive the proper amount of promotion as Clean Edge prepares to step into the marketplace spotlight. After reviewing potential segments of the non-disposable razor market that Paramount could target with the launch of the Clean Edge razor, it is clear that the quality and sophistication of the product place it squarely within the super premium segment of grooming products. The razor is truly the first of its kind, offering a soft, vibrating handle that gently lifts hair to provide the closest possible shave. It effectively removes hair and allows for an unparalleled level of precision when shaving. Shavers who are looking for both a quality shave and an enjoyable shaving experience need look no further than the Clean Edge. For these reasons, Paramount should look to primarily target the social, emotional segment of the shaving population. Those shavers typically look for superior products within the market and consider shaving part of a daily grooming ritual. The Clean Edge is the perfect solution for shavers looking to meet those needs. Additionally, due to the fact that this segment chooses non-disposable over disposable razors, indicates that there may be opportunity to appeal to the environmental awareness of the group. When marketing the product to this segment, we recommend that Paramount frame the Clean Edge as being a responsible choice in terms of the impact it will have on the environment. In addition to their primary target customer base, Paramount should also look to appeal to the aesthetic shavers in the market as well. Not only does the Clean Edge enhance the overall experience of shaving, but it has also demonstrated a 25% increase in hair removal versus its competitors. The shavers within the aesthetic segment demand the high level of effectiveness the Clean Edge will provide. Paramount, therefore, should look to capture their segment of the market as well. Within the social-emotional segment, we recommend that Paramount also initially target the male population of the razor market. The company already has a strong presence among the male segment of the market, and that segment projects a higher growth rate in the mainstream for products focused on men rather than women. As the Clean Edge gradually shifts from being a niche product to being pushed into the mainstream, which will be discussed later in our analysis, the company should expand its focus to also include the female consumer within the shaving and grooming segment. Essentially, the company should market the product in a niche market with a primary focus on male consumers and ultimately shift its focus to the mainstream segment, which will include both male and female consumers. The product will shift into the mainstream during the same time period that the Paramount Pro is projected to decline in sales as well. The timing of the shift will help bolster any losses Paramount might otherwise face, and will also help launch the Clean Edge to the forefront of the company's quality product line. I will now pass it to Omar, who will discuss our group's second recommendation.
In terms of brand positioning, we want to make sure that customers know that we're associated with the trusted Paramount brand. So therefore, rather than going as a standalone name as just Clean Edge, we want to make sure that we're recognized as Paramount Clean Edge, similar to how Gillette positions its Venus product line for women. Clean Edge will resonate with the most attentive groomers, because now they'll receive the closest and cleanest, smoothest shave that the industry offers. We found out with the product research that involved razor users will be thrilled with this innovative product. So we want to target those involved razor users. In year one, the social emotional shavers, part of the involved razor users, will be our primary focus. In year two, we will expand to aesthetic shavers. And at that point, we will reevaluate whether we would like to stay in the niche market or we would like to expand into the mainstream market. Things we want to recognize is the internal product cannibalization. Now, if we went the mainstream market strategy, there would be a 60% cannibalization into our current market share. If we went with the niche strategy, there would be a 35% cannibalization of our current market share. Now, although this sounds bad, it is also necessary because with Paramount Pro, we're already experiencing stagnation and we're expecting declines in the next couple of years. Paramount Avail is already there. As you can see from this data, they've been consistently declining for the last couple of years. And Paramount Pro, their numbers, they're not growing. Now for our niche positioning, we would want to make sure that we have a price point of $12.99 with refill cartridges for $10.50. Now with marketing initially, we could propose a battery with the initial purchase as a type of promotion. I feel confident with the pricing in terms of comparison with the other product lines. Two of the companies that we're looking at competitively is the Prince Cogent as well as the Radiance Nave. Now, Radiance Nave with their pulsing razor, where they're expected to get a 13% share. Prince Cogent, they have a relatively high volume. So that's something that we're keeping track of in terms of how competitive we are with these companies. In year two, what we can do is we can evaluate whether we want to expand to the mainstream strategy. And at that point, with pricing, we could lower the pricing for the razor to $11.19 and for the refill cartridges to around $8.89. And because our innovative product is so unique and it's non-disposable to the razor market, we feel pretty confident with our brand position strategy, especially aligning with the Paramount name. I believe that this will be successful with how we transition from the niche market to potentially going forward with the marketing with the mainstream market.
Hi everyone, my name is Emmanuel Carrena. I will be presenting the marketing budget session of our presentation. We are deciding to enter the niche market for four main reasons. First, it's a more nimble market. The cost to invest is a lot smaller in the niche market versus the mainstream markets. Second, there's a higher profit per product. The contribution margin is at 45% in the niche market versus 35% in the mainstream market. Third, the marketing budget is a lot smaller in the niche market at 15 million versus 42 million between niche and mainstream respectively. Fourth but not least, we believe that the mainstream market, although it has a higher volume, is more saturated with more players. So our strategy is to start off year one focusing on only the niche market because we already have a strong presence with our name, our brand name, and we also have a great product that was just tested and everyone seems to like the product. So once we are able to generate some a higher contribution margin in year one, we will have the fund to expand to a wider markets and enter the mainstream markets. There we are looking to include the women population in addition to the male population where we already have a strong presence. And in order to do so, our effort will be focused on the drug and food stores where the case study has shown that there's a higher return on investments. And we are also looking, as a second point, we are looking to really emphasize how environmentally friendly our products are so that we can capture a wider audience and maintain a high customer loyalty for the long run. Speaking of long run, we are actually projecting an increase from year 2 to year 3 in each category, razor and cartridge. As the case has shown, that we can have up to 5% increase year over year with the razors and a 2% sales increase year over year with the cartridges. So we are looking to capitalize on that growth, but most importantly, in order to maintain a high contribution margin, we will look to spend the same amount we spend in year 2 in year 3. This will help us really keep a high contribution margin. And as you can see, our slide shows that we are looking to have a contribution margin of 61% in the niche markets in year 2, and eventually a 62% contribution margin in year 3 with the same products. Thank you for your time, and I hope you enjoy the razors that Paramount has to offer. Thank you.